2025 is going to be the year that everyone is speculating around property prices and what the RBA is going to do in terms of rate cuts. Because so many Australians will start feeling the pinch of these mortgage hikes, plus the cost of living, plus the property prices being so high. It's all coming together into a bit of a storm. So in this video, we're going to be breaking down what some of the property commentators are saying around interest rate cuts. When's the first cut going to happen? And what's the impact on property prices? Now, my name's Luke and I talk all things real estate, renovating and financial freedom. If you're interested in any of this content, make sure you subscribe down below and let's just dive into it. So there's shock rates warning for all Australian homeowners. Homeowners across the country have been hit hard, with around 1 in 10 now relying on an interest rate cut from the RBA to stay afloat. Experts have revised warnings for homeowners as shock new research shows just how much pain mortgage holders are currently under. A massive 71% of those who have mortgages were depending on a rate cut to stay on track financially. What does staying on track financially mean? Mozo's money expert Rachel Wastel said nearly 3/4 of mortgage holders are relying on an interest rate cut from the RBA to keep on top of their repayments as they continue to struggle with the impact of 13 rate hikes. Now, it's really interesting because when they say people are dependent or they're tracking themselves financially, relying on a rate cut in May, for example, then that just might be around their budgeting process. There's certainly Australians who are going to be struggling right now with the current interest rates. It's not cheap unless you've got a significant income or you've got properties that are significantly yielding or you've not got a too high LVR. But anyone who's bought in the last few years and taken on a massive amount of debt and have not got the income coming in to support that debt will be struggling with the current repayments. The thing is, if you're investing in property, it should be a long-term investment. You should understand that, yes, there are going to be years, especially early in the days of building your property portfolio, that you're going to be going backwards. You're going to be negative gearing in this case, and you're going to be making more repayments than money is coming in. But there's always a tipping point. It's a seesaw. You start on one end of the seesaw where it's very heavy and you're really struggling to make repayments, and slowly over time, values of property increases, rents increase, and you start to move towards that midpoint. And then eventually that seesaw tips and you find that you're on the other side and you're now getting more cash flow coming in. You've got lower debt levels compared to the property values, and you can potentially sell off an asset here or there and reduce some debt levels and increase your cash flow holdings. So the big picture is it's a long-term trajectory. Whether it's your own home or an investment property, you need to be able to manage the cash flow and the repayments, but you shouldn't be reliant on the RBA in making the decision. You should factor in that rates could go up 2, 3, 4, 5%. You should stress test your family's budget and cash flows and make sure that when you make a property purchase, whether it's your own home or an investment, you've run the numbers and a worst case scenario. I never want to know that, I can't hold a property in 10 or 12% interest rate scenarios. I want to know that my investing journey in my own home is safe in those higher interest rate environments. So stress test your own numbers and see what the numbers look like in those situations. This is concerning because homeowners are essentially counting their chickens before they hatch. There's no guarantee the RBA will deliver a rate cut next month. It's clear that the majority of mortgage holders are looking for the RBA for relief, but waiting for a rate cut isn't the only option. Refinancing your mortgage now could give you a rate cut today with no RBA decision required. Or if you can't afford to refinance, comparing the rates on offer from other lenders could give you the ammunition you need to negotiate a lower rate for your current home loan. Now that's such a good point. Being sharp on your debt and managing your loans really well is important. So there's a couple of things that this article points out, like refinancing. That's going to potentially lower the interest rate. So say you go from a 7% interest rate to a 6.5% interest rate. That's immediate relief on the repayments you need to make. The other thing is you could extend the life of your loan. So if you've been paying down your mortgage for the last 10 years and you've got 20 years left, you could increase that amortization period to 30 years. Now, of course, over the life of that loan, you're going to pay more interest if you just paid the minimum repayments. But what I'd suggest to people, and this is what I do, is build up your buffers in the offset account to pay off your mortgage faster rather than just paying down the debt directly. The big thing that people miss in these general articles and things like that is liquidity. So if you're struggling with your repayments, refinancing can not only improve the interest rate, it can improve your liquidity. And that means, say you can refinance and pull out an extra 50 grand. Well, that could be repayments for 2 years for some Australians. And so you might be able to be a lot less stressed about your day job or a lot less stressed about your family and your lifestyle if you've got money sitting in the offset account, sitting there in the kitty, ready to be used for repayments if needed. That's the way I actually run our portfolio. I should say my portfolio now moving forward. The reason I do it that way, and the reason Emily and I have always structured our portfolio that way, is it gives yourself more choices. If you can give yourself, you don't want to give the bank the choice as to whether they foreclose on you or say that you're in arrears. If you've got money parked in offset accounts, even if you don't plan on using it for other investments, just there, available, when you've got the serviceability to get that money, go out there and refinance and get it. Because having money at your disposal is going to give you the choice, rather than if you're unable to refinance, the bank's the one in the power position at the end of the day. So to close out this article, she said 422 home loans on the Mozo database. The average rate was currently 6.73% a year. It may not seem like a big difference, but when it comes to home loans, the smallest difference in interest rates can equal hundreds of dollars in monthly savings. Only baby boomers prioritize paying off other debts before their mortgage, Mozo found. I'm certainly not denying that there are people feeling the pinch out there. If you're watching this video, I just don't want you to be one of them. So employ these strategies to avoid an interest rate pinch. Sharpen the interest rates, give yourself liquidity, and have an eye on how you can create more cash flow and more growth in your property portfolio, which is going to give you more choices. If you're investing in assets that are going to grow in equity, you can sell down. Now, that's something Emily and I did early in 2024 when we sold the Baby Queenslander, which was our property located in Everton Park. In 2024, we made the decision to sell one of our properties. Interest rates had gone up significantly, and instead of holding onto that capital growth asset, it had already had really strong growth. So we decided to cash in on that asset, free up some debt, free up some equity, and then use those funds to buy 2 more investment properties which better suited our investment journey going forward. So there are circumstances where in these situations, it can be okay to sell. I know Australians that might have a massive home, baby boomers are a great example. You've got a 4-bed, 2-bath home. It's just the 2 of you. Maybe you downsize at this point in time and buy something a bit smaller and then invest your funds elsewhere. There's opportunities for you to pull and push in your property portfolio to try and have the right assets at the right point in time. It's easy to say these things, but much harder to put them into process and into your reality. Everyone can conceptually understand, okay, I need to manage my debt and interest rates. I need to look to build for the future. I need to understand how serviceability works. But that's why having the right team around you can be crucial. Myself and the team and a lot of our clients have been working with Nevada and the Cube Home Loans team. If you're looking to find the right mortgage broker to help you sharpen the interest rate and access your equity and liquidity, head to the description below to find Nevada's details and book in a chat there. If you're actually looking to grow your investing knowledge or you're looking to buy a property here in the Brisbane market, head over to purposeproperty.com.au. We have a course for people who are looking for full information on building a property portfolio and scaling. And we also offer a buyer's agency service where we help people buy their own home or an investment property here in the greater Brisbane market. So head over to purposeproperty.com.au for those things. Now, in terms of 2025 and interest rate cuts, I can't see the RBA holding out too long on rate cuts, but I also don't think they're going to be very aggressive with giving those rate cuts to Australians. I think we're likely to see a 0.25% cut probably in May or June. From there, maybe 1 or 2 more 0.25% cuts towards the end of 2025. I don't think we are going to see a full percentage cut unless the economy is really struggling and they're really wanting to kickstart the markets again. I think they might drop by 0.75% with 3 cuts across 2025. What are your thoughts? What do you think are going to happen in terms of RBA cuts this year? It'll be very interesting to hear your comments below. And if you want to hear more things on real estate, renovating, and financial freedom, YouTube really thinks you should click this video right here. Just give that one a click. I'll see you in the next one. Peace.